Welcome back. It's time to look at the delivery numbers of electric vehicles in China. So talking through the delivery numbers for Tesla, NIO, Xiaopeng, as well as Li Auto. And if you appreciate the work that I'm putting in here, in also doing this Excel sheet where I cover all of the sales numbers, and I do these monthly videos on the sales as well, the updates here, and please leave this video a quick like. And by the way, in this Excel sheet, I'm not only tracking the deliveries, but also do the business case assumptions for NIO. So if that's interesting for you, you may also consider joining our Patreon, because here I just update a 2.0 update on the estimations that I'm making for NIO, and I'll publish them. And later on, I'm obviously also diving more into the specifics of that. So please stay tuned of what's coming up here also on the channel. Now back to monthly delivery numbers, and of course we need to be careful about monthly deliveries because auto industry is very cyclical. I've warned about Q1 countless times, and also month on month there can be quite specific changes due to various reasons, and it's actually better to look at the quarterly deliveries. Anyways, I want to give you some insights into the actual deliveries of these companies, and also the guidance and outlook and my interpretation of those numbers. So first of all, the big news of today is that we have finally the deliveries for Tesla in February, more than 18,000 cars. So that is quite significant here. It's really good numbers in my point of view, because as always, I have been warning about Q1 being very weak. Then I was surprised by NIO actually having quite good February sales and quite good outlook for Q1 in total. And now Tesla is coming up with 18,000 cars delivered in February, and that is a improvement on the January numbers. So here Tesla actually is better even than the Chinese startups NIO, Li Auto and Xiaopeng in terms of January to February growth, which is impressive. So in contrast to Tesla, NIO sold around 5,500 cars in February. Li Auto sold around 2,300, and well, XPeng dropped to 2,223. So if you look at the numbers in January, you can see for Li Auto and XPeng, it's been quite a steep drop. For NIO, it's been a drop as well, but not as much as the other two. Now, the interesting thing for the Chinese companies here is that we already have the guidance for the full Q1. And for Q1, NIO has guided to reach around 20,500 cars in sales. Li Auto aims for 11,500 and XPeng for 12,500. And that would result that NIO should actually sell around 7,700 cars in March. And well, Li Auto and XPeng both expect to pick up with their sales again and selling close to 5,000 cars each, whereas well, XPeng either rather on the low side here with 4,300 cars around about. So in order to give you an easier overlook what this means in the long run, I made those charts where you can see the month-on-month growth for NIO and Tesla. And you can see that Tesla was struggling quite a bit in January here, where NIO grew from December to January, and Tesla was dropping a little bit, but now Tesla is coming back strong. And I expect that they could closely beat actually their December number here on a monthly basis for March. And for NIO, this one is actually, well, based on the company outlook there, they should actually also pick it up again from the February sales and actually be slightly higher than the January sales. So on a quarter-on-quarter outlook here, that would mean that NIO is actually the only company to grow from Q4 to Q1. Even Tesla, in my point of view, will slightly miss a Q4 to Q1 growth. But this is actually, in my point of view, to be expected. I actually expected the same thing to happen for NIO, as Q1 is usually the slowest quarter in the entire year. Automotive, highly cyclical. Now I also made this chart because I need to adjust actually the monthly workdays, because the issue about the February sales is usually that we have Chinese New Year, so effectively it's only 23 days in the month where the factory can actually deliver cars and where there is output and so on. So breaking this down, it was interesting to see that actually a monthly delivery rate kind of, and Tesla is close to 800 in my point of view. So that's my estimation here, that they will kind of keep a very similar level to February in March. But you can see that the overall growth from Tesla has been the highest, but it's also much more volatile. So in January, they already had kind of their down phase, while NIO is the most steady grower here. They have been growing every month on this metric, and that's also in contrast to the other peers, XPeng and Li Auto, which were getting closer to NIO's output there, but then are now falling back. And that's interesting to see, because I've also emphasizing in the past that NIO has actually, among all of those four, the highest average sales price. That would actually mean that XPeng would have to sell more than double of the NIO cars number in order to make the same net amount in vehicle sales after the vehicle margin, and then also later on, obviously, after the gross margin. So NIO is actually doing a fantastic job here, growing in this higher average sales price field, in my point of view, with some very steady growth. The only company that is likely to grow from Q4 to Q1, maybe Tesla can actually also achieve the same, but for the others, they won't be able to match that. And of course, with Tesla being the company that is most explosive here and keeps on pumping out more, and I think the numbers from today actually seem that Tesla is really bound for a great year here if they can continue with this growth rate. And for NIO, it's getting maybe a little bit slighter in growth for the next coming months. We had the warnings about some issues on the supply side for Q2, but I'm expecting that they kind of keep the growth rate at a lower rate here, and then for Q3 and Q4, they should actually pick up also on this metric here for the monthly workdays. So for me, the growth rates here for Tesla and NIO are looking quite healthy, to be honest. NIO is on a way here to get this 100% year-over-year growth rate. Tesla, which would be aiming for more than 50% growth year-over-year, might actually surprise here and might actually be looking to improve much further. For XPeng and Li Auto, they need to get back on track. And as mentioned before, XPeng actually would need to overtake NIO in terms of deliveries in order to make back the same at the bottom line of the business. So this is it about the deliveries. Now let's talk about another topic, which is about the recent rumors of a secondary listing of XPeng, Li Auto and NIO at Hong Kong. So we see that companies like, for instance, JD or Baidu, they make those secondary listings also now in Hong Kong in order to be more accessible for Chinese investors, but also for those US tensions that, with all of the delisting fear around Chinese stocks, if they just get listed in Hong Kong, that's a way also to tap into the international markets. At the same time, if they would get delisted at the US indices like NASDAQ and so on, that wouldn't be as risky anymore for the core business. Now, as I have already shown my views here on the Patreon community, in the network, in the Dongxi network, my take is that, NIO wouldn't actually need those additional funds. They have now more than $6.5 billion in funds at hand. But of course, they have big growth plans, and yes, they could raise even more cash with an IPO in Hong Kong. On top of that, we would need to see in the specifics of such a deal, would this dilute current shareholders or not? These may be some of the negative aspects, such as secondary. But on top of that, I think what NIO is rather looking to do in the future is actually to go and make a listing at the Chinese Shanghai Star Market, which is like the national NASDAQ, if you will. And one of those prospects, if you want to go there, is actually that the company needs to be profitable, and then they can tap into local RMB and really the mainland Chinese investors that are, for instance, not able to invest overseas. But that may actually change in the short term actually already, because the Chinese government is now trying to negotiate with the US with all the delisting fear and the tensions between US and China, and wants to enable Chinese investors to invest more than up to $50,000 each into the US stock markets. That would obviously benefit also their Chinese tech companies, but maybe also some other US listed companies, and in general should be good for the stock markets. So for me, this rumor sounds more like a little bit of a risk management issue here. Should there be more pressure on Chinese tech companies because of the US, then they certainly would do that move. I would say that if even one of those companies does this step, like Li Auto or XPeng, then maybe NIO has to do the same thing, similar to the recent stock offerings. If one of those competitors is doing it, then it would be a disadvantage to, for instance, NIO to not do the same thing. So yeah, it could happen, but we would need to look into the specifics of that deal. So with that, I hope you found that insightful. Please leave a quick like and a comment, and then see you in the next one.